Okay, hello everyone. Welcome to the HodlCast. Today we have special guest Michael Creadon, who's the head of institutional institutional sales with DrawBridge Lending. So, Michael, thank you so much for taking the time out today. Maybe you could give us a little introduction about your career path and how you got involved with Bitcoin.
Absolutely. Well, thank you so much for having me. I'm really excited to be on. And I know you just had my friend Anessa on recently as well, so that's great. I heard she did a great job. So, but I'm in Chicago. My background, most of my career, the bulk of my career was as an interest rate trader at the Chicago Board of Trade and Chicago Mercantile Exchange. So, worked as started as a clerk, then a trader, then I started a company and was CEO and head of risk. So, I have 20 years of capital markets experience. We, a lot of regulation along the way. We were mainly a CFTC regulated entity, but really the regulator that we dealt with the most was the CME and the exchanges. So they would keep an eye on their clients and we would work with them. So, that was my background. Around 2017, decided it was time to do something different. Didn't know what I wanted to do. And just by happenstance, ended up at a dinner with some pretty prominent investors that were already really involved in Bitcoin. And I just literally listened. It was the most riveting conversation I think I've ever heard. It was like 3 hours of just listening. And I was like, you know what? I really want to focus my attention on Bitcoin, blockchain, find out what these things are, and, see if there's something for me to do in the space. And so I've pretty much about 2 years now, I've been really involved in the space.
Excellent. And what's something about you that a lot of people might not know?
I saw that. I was like, I have no idea. And this is such a dumb answer, but I was like, I saw a commercial the other day. I was like, you know what? I've never seen a James Bond movie in my entire life. I've never seen I've seen the commercials and they come and go. And I've never, it's just that I like mob movies. So.
Oh yeah, me too. I love a good mob. Did you see that recent one, The Irishman?
I need to see that. I need to like carve out like 6 hours to go see it. But I love Martin Scorsese.
Mm-hmm.
Yeah, I'm a big fan of Martin Scorsese and Robert De Niro, and I don't even know who's all in it, but it looks really
Al
good.
Pacino's in there, yeah. But it's funny, they did a lot of, sorry, I got way off topic already, but they did a lot of work on their faces in the movie. So Al Pacino is one of my favorite actors, and it took me like a few times seeing him to even realize. I was like still waiting for him to come in, but they have him looking a lot different than we're used to seeing him. But it's and then they have Robert De Niro. They changed timelines a lot in the movie, so they have Robert De Niro there kicking the crap out of someone, but he's an old man, and you can kind of tell, but his face looks like he's 40. So
I want to see that, and then I think I believe in the next 12 months or so, there's a prequel to Sopranos, which is supposed to be due out.
Oh, that would be awesome.
They were going to call it, the name was going to be like, I forget, The Saints of Newark, and then I think they changed the name to just Newark. It's just called Newark. But I think it's Scorsese, and you know what's going to be unbelievable. Tony Soprano, like James, forget how to pronounce his name, the guy that played Tony Soprano's actual real-life son is going to play Tony Soprano is like a 21-year-old in that movie.
Oh, nice.
He doesn't have a big body of work as an actor, and they weren't sure if he could do it, and then they're like, "This is our guy." So I'm dying to see that. That's gonna be I think that's out next year, but I know. So anyway.
Mm-hmm. Oh, that'll be good. And then so you work at DrawBridge Lending. Can you tell us a little bit? Sure. So you provide lending services against Bitcoin?
Correct. Mm-hmm. So, our whole business is based on two pillars, like it's compliance and regulation on the one hand, and there's risk management on the other. So our entire team here has been in capital markets basically our whole careers. Our CEO was at Goldman Sachs and DRW, Trade and Equity Vol for 20 years. Our chairman, I was a client of our former chairman. He was at ABN AMRO. He was there with our general counsel. My former business partner was one of the founders here. And that's how, Jason O'Reilly was kind enough to invite me to join this team last year. But we're all cut from the same, cloth, so to speak, which is we've been around markets our whole life. So all we're really doing is applying a lot of the things we learned in traditional markets and applying it to digital assets, primarily Bitcoin. But yes, that's what we do. We lend. We have two products mainly. We either lend against Bitcoin to people that want to borrow against the asset, or we can put people into a fund. We have a fund, and we're a commodity trading advisor, commodity pool operator. We're a state lender in 49 states. We have all the necessary documentation, paperwork that you need to do these things, and that's what we do. And one last thing I should mention, because we're using options, which are swaps in the CFTC's eyes, which are the only eyes that matter, we can only face accredited individuals. We can't face retail. So that basically means $1 million net worth. And it would be great to face retail, although that may change next year because some of the rules have changed. We can talk about that. But primarily, we're dealing with institutional clients, high net worth individuals, ultra high net worth asset managers, that type of thing, as opposed to the retail crowd.
Mm-hmm. Oh, interesting. Yeah. I've done a little work with one hedge fund that's in the Bitcoin space, just getting started, and it was quite a lot to navigate. They're small. They're just kind of getting their feet under them right now. But it was a lot of work to figure out the right way to set everything up for them.
Right.
And yeah, we tried everything to find a way that they could have retail clients in it, but I had to put the foot down pretty hard on that. They're small enough. But they're small enough that we still did it as Reg D, and then allowed 35 non-accredited investors to come in that way. But it was, and I shouldn't say too much about them, but yeah. It was, if as soon as they grow past a certain level, it's going to be clear cut that they can't have the retail investors.
Well, one thing there's so many things changing. I mean, the industry changes very quickly, but we're going to be able to roll out some of our products for our fund to retail clients. And the reason for that is because we're able to use futures only. So we're not using options contracts or swaps. That's the thing that trips you up and pushes you sort of towards the institutional. We're going to be able to use futures contracts, and then those will be available to retail clients. We're going to be rolling that out next year. My general counsel could probably walk you through, the details of that a little bit more, but that's exciting. So we'll be able to face retail clients in 2020 to some degree.
Will you guys be the first ones offering a crypto solution like that in a fund for retail?
I don't.
Uh-oh. Did I lose you?
No, it's still there. I had another call coming in. And I'm on my phone, of course. I don't know the answer to that, but I want to be careful how I present this because I want to make sure I get it. I'm sure I don't know exactly, but here's the thing. Because I'm just talking about our lending product for a second. Our loans are all non-recourse, non-margin. So when somebody will give us a coin, we put it into custody, we hedge the risk with options, and we give them the cash. We never have to go back to them and say, you got to give us more money. You got to, because we have the options protection, the custody protection. So because the loans are non-recourse, non-margin, it's our belief that we're like the only institutional player in Bitcoin that can face RIAs directly. Because, and again, I'm not an attorney, but my attorney was really studying this. He said, look, in an RIA, if the loans are non-recourse, non-margin, somebody has an RIA, they could take a loan from us or join our fund directly because they're non-recourse, non-margin loans. In that regard, I think we believe we're like the only firm in the country that's able to offer that. Because in this point in time, given the way we're structured, that we've sort of found this niche. So RIAs are knocking on the door and trying to find out more information, which is great. And we're trying to work with them, and we're trying to, make sure that we're doing things in a compliant manner.
Mm-hmm. Oh, that's excellent. That's exciting.
Yeah, it is exciting. Yeah.
Mm-hmm. You'll probably see a lot of growth over the next year with it.
I hope so.
So the main topic we were going to look at today was actually around Africa and the crypto development there. The way we found each other, you had a LinkedIn post sharing, Jack Dorsey, the Twitter and Square CEO. He's kind of becoming heavily invested in this. I think he's going to Africa. So what have you found about the future of Bitcoin in Africa?
Well, we'll see. Just as some background, and this is probably something that people also don't know about me, but I was a Peace Corps volunteer in Africa a long time ago. I was in Namibia, which is in Southern Africa. And that was back in 1990, 91, 92. So it was, almost 30 years ago. I was right out of college. And so I lived in Africa for 2 years. And, so I have that experience. And so I follow Africa to a certain degree. And I read a lot about, or try to read about what's going on. But my understanding is mobile payments have just exploded in Africa. So now, almost many people, even people with not a lot of money, which is most of Africa, has cell phones. Everyone has cell phones. They apparently have great wireless coverage, which is just crazy to think about. I mean, the town I lived in didn't have a phone. I mean, I lived in a town with no phone, and now 30 years later, everybody's walking around with cell phones. But the thing is, banks are too far. How can you go to a bank? Everybody's got a car, and so you think about it, it's like, well, this is never going to work. People are just going to have their phones, and they're going to have the equivalent of PayPal, Venmo, Zelle, whatever it is, and they're just going to fire money back and forth to each other, and that's how they're going to pay each other. So
but even to have those applications, they need to have opened a bank at some point, right?
Yeah, right. Okay, so you make the trip, you get a ride to a bank 120 miles away, you open an account, but then you're done. You never go back, right? You can get around. I mean, Namibia this is a trivia, like it's the least it's the most sparsely populated country in the world. I mean, it's bigger than in Texas and Oklahoma, but only has a population of about 1.5 million. So again, people live scattered in remote places. But you can still make the trip. You can get to a bank. But the point is, you can't get to a bank every Friday. You can't get, you're just not, it's not practical. And so, I read that article about Jack Dorsey. I guess he's going to move to Africa for 3 to 6 months next year, maybe Nigeria or Ghana or Kenya, wherever it ends up being, because he sees great growth there for both his businesses, which are Twitter and I believe Square is his other company that he's CEO of. And it just, I thought this resonates with me. This is a guy that's thinking outside the box. This is an organization that's looking at the future and saying there's great growth there. And there was an article, something in that article about Jack Dorsey that said, I think in 30 years or something, or 50 years, half the biggest cities in the world will be in Africa. I mean, that's crazy to think about, because that's not the case right now. I think maybe there's 3 cities in the top 25 that population-wise, but in a generation or two, half the biggest cities in the world will be in Africa. So, it's pretty interesting.
Yeah. I was shocked when I saw that too, that I had no idea the population was projected to grow that fast.
Right.
So what is there, you said they have good internet service right now, or?
That's my understanding. I mean, again, I don't know. I'm not there. I'm sure it varies by country, but I think, look, Bitcoin and blockchain are transformational technologies that I always look at it and think, in this country, we're sort of spoiled. I mean, especially as it pertains to Bitcoin. We have a strong economy, a strong dollar, a strong military, a strong judiciary. We don't need an alternative currency. But many countries in the world don't have any of those things. They don't have, and so there's real risk. If you work in, Zaire, or Zambia, or Namibia, or, Tanzania, and you're a civil servant, and you get paid in local currency, there's a real risk that currency could implode. And look at what's happening in Argentina and Venezuela. This is what's happening in the world today. Currencies are just falling down. And so that's where I think a lot of people will say, look, I can't, Zimbabwe's had inflation of 50,000% a year. People say, I don't want my money, my hard-earned money in a small currency in Africa. So I think some people will look for a global currency. And I think that there's a pathway to Bitcoin being that currency over time. Probably not there yet, but you got to remember, if you're sitting in Senegal, you may not have access to US dollars or the euro currency or the Swiss franc, because of trade sanctions or whatever the case may be. And that's where this idea of, hey, look, we can have Bitcoin become maybe not the standard currency, but an alternative currency. And I think there's a potential there will be some adoption along those lines. And that's where I thought, Jack Dorsey, like I said, he's the CEO of Square, which is a payments company. So he's going there for a reason. I think he just sees payments, adapting at a different rate than maybe they do here. I don't know. I'm not sure why he's going there, but I'm just trying to read between the lines.
I think you're right on the money there with his motivation. I've saw some articles too of people criticizing him, like how is he going to be the CEO of Twitter with the election coming up and he's off somewhere in Africa, helping their economy. But I think it's great that he's doing that. And it's not like as long as they have internet, I'm sure he can do his job from there too. It's not like he's getting cut off from all communication.
It's funny because Twitter is a publicly traded company. Square, as I think is still privately held. Look, if his board and his shareholders and it's investment committees, or whatever they call it, are supportive, and God love them. Let him run two companies. I mean, whatever. Mm-hmm. It's his prerogative.
Yeah. And so so you mentioned like in America, we're kind of spoiled with good, pretty fair economy and governance and democracy. What is it like in Africa, as far as and like I guess my real question is, could Bitcoin help give people more freedom over their personal lives?
It's funny. I haven't followed Africa's sort of trajectory with digital assets as closely as I've followed, let's say, Latin America for whatever reason. I don't know why, but Latin America seems to be in the news more often, at least here. But I took out a map of South America, and I just looked at it, and I forget, I think there's 15 countries in South America, whatever the number is. And if you count them, if you go, just go around, just kind of anecdotally. Okay, Venezuela is just falling apart. Okay, there's protests in Ecuador and Bolivia. There's protests in Chile. Argentina has defaulted 1 million times over, and their currency's been destroyed. Their stock market fell 50% in an hour earlier this year. That's crazy. So literally, and I forget, there's a couple other places where there's various forms of civil unrest. By the way, I mean, they've impeached the last 3 prime ministers in Brazil or whatever. I mean, it's crazy. You look around. At least half the countries in South America are currently facing enormous civil and political and economic strife. Enormous. I mean, like I had a friend that was just in Chile on their honeymoon. She said we couldn't get out of the country fast enough. We took the cab to the airport and just got on the first flight to leave. And so again, we sit here in the safety of we have problems in this country as well. You look at Latin America, South America, and it's real. And I look at this and think, if you had money, if you're sitting in Venezuela or Argentina and Chile and you have wealth, how in the world could you keep the money in your local currency? I mean, of course you can't. I mean, so then the question becomes, where are you going to put it? And so that's how I look at it. Again, I haven't followed. There's 51 countries in Africa, so my guess is Africa's probably further, on the curve of digital assets. They're probably at the earlier stages for obvious reasons. But I get the impression that, there's a cause for or need for change in South America. I'll also tell you that we have tremendous demand from Asia. I think there's more political stability in lots of parts of Asia, but I also think there's considerable amounts of fear, quite frankly. I mean, Hong Kong is the most obvious example. I had a friend over there. They said they had to shut the schools down for 2 weeks because of the protests in the street. People couldn't go to work because they had to stay with their kids. I mean, so you get the impression that people are getting nervous in Hong Kong and are saying, we need a safety valve or an exit route or whatever you want to call it for some of our capital. And some of that money, presumably, a lot of it's probably moving to gold, but some of it will move to Bitcoin. Mm-hmm. I mean, again, we don't see this in our communities here because we're just detached from it. Here it's largely a speculative tool. People, I'll buy some Bitcoin. It goes up, it goes down. Great. It's like going to a casino. I think there's a greater sense of urgency in other parts of the world to diversify assets. And I think we're still at the very early stages of that trend developing.
Agreed. I have a good friend I went to school with who he spent some time in Colombia. Just last year, he met a girl there and, they ended up getting married actually. And now they're in the process of moving her over to back to Florida. But he was going back and forth for a little while. And he said they were doing, a lot of people, they were told they're not allowed mining Bitcoin there, but people were driving around in portable vans that were wired up with internet connections, so that it wasn't, no one could identify where the, power surge of electricity was coming from. But it was, he thought it was fairly common. Like, you'd see these cars going by. You can't tell for sure, but some of his friends, would explain that they were all doing it. And it just seemed, it kind of sounded encouraging to me, like that, they know what it is, they want it.
Oh, absolutely.
It's a way for people to get money. But I think, the mining is a fairly expensive way to get Bitcoin these days. But
no, you're absolutely right. I mean, those are my own personal view on just Bitcoin in general and digital assets is, you've got the two main drivers of what will, transpire over the next 25 years or so forth. One is the international growth story, but the second component is just youth of just, generally, whatever that means, ages 10 to 35 or whatever you decide. But, I'll just tell a quick little story. My sister has triplets and they graduated from college last year, and everyone knew I write about Bitcoin. So we were talking about it, but, you talk to the college students and like all of them know what Bitcoin and Ethereum is. They have wallets, they're, sending money. Hey, here's $50 I owe you and I'll send you Bitcoin. They talk to the parents who are like my age and my contemporaries, and they're just, they don't know they don't know anything. Like, they don't know what blockchain or Bitcoin even are. And I understand because they're busy. They have their professionals, they're raising children. They just don't have time. And so, but that, as the calendar marches forward, you just have literally billions of people around the world that are young, that are growing up around technology. My kids know how to use my computer better than I do. They're 9 and 7. And they're not going to have any difficulty setting up a wallet for themselves. You know what I mean? And so that's where I think, look, if you look up in 5 or 10 years, these trends won't change. There's going to be demand overseas for alternative assets. And you're going to have a whole generation of children that grow up that are highly sophisticated with how to use technology. Those are the things that are going to drive this thing forward. Doesn't mean the next 3 months or 6 months or 12 months, but I think over time, those two forces are pretty compelling.
Mm-hmm. Agreed. And I saw a recent tweet that showed more millennials had the Grayscale Bitcoin Trust than most other, of the blue chips. So it was,
yeah, I saw that. I haven't really had a chance to look at it, but I think about 50 people sent that to me because they want me to write about it or say, yeah, look, this is real. I have a theory on that, and again, I have no evidence of it, but I personally think that a lot of high school students, college students, or kids out of college, there a lot of families got hit hard in 2008 and 2009, 2010. A lot of college tuition savings accounts were wiped out. Parents were wiped out, and I think that where my generation treated JP Morgan and the banks like, the right hand of God, I think a lot of people grow up and say, I don't have the same trust in the system that my parents did because I've seen my parents suffer. And I think look at the student debt numbers in this country. They're astronomical. And so people look at, I think this generation, whatever we're calling it, has a much higher level of skepticism of banking than maybe my generation did. And I think it's real. I think, but yeah, this report that said that they're, this is the 5th biggest investment of millennials, or, speaks for itself.
I wonder what the sample size and all that was, though, because
yeah, exactly.
I don't know how many people.
I didn't look at it.
I didn't think a lot of people even knew what Grayscale Bitcoin Trust was, so I was kind of surprised to see it right up there.
God, tip your cap to Grayscale. They were an early adapter. They were on this early. They have, $3 billion under management. It's not a small amount. It's not. And I think we look at it and say, well, they're obviously a competitor. But what do they bring to the market? Well, people trust them. They've convinced people that they're a trustable entity and organization, and they've worked through all the mechanics. And so when someone says, "Hey, I want to buy Bitcoin, but I don't want to have to deal with a wallet or go on an exchange," they just say, "Boom, I'll just call Grayscale." Even younger people, which is great. And and look, they've got a huge first mover principle. But their assets under management are are real from what I can tell, and they're significant. So I think the numbers are perfectly credible. I don't have no reason to doubt them.
Mm-hmm. No, I wasn't saying I doubted Grayscale.
Yeah.
I was doubting the sample size, perhaps, that,
Yeah.
how do you know the millennials are the ones? But I'm sure there's, I haven't looked into it either. I just saw a tweet, but it was surprised me. Yeah.
Understood. Yeah.
Yeah. And so where do you see the future of this going? Is it like, do you see a big need for these kind of custody solutions like Grayscale, that would take the ease of use out of the consumer's hand and make it kind of like what they're used to of using a bank account? Or do you think it's very important that people know how to hold their own private keys and take control of their own assets?
Well, I think both are important, and I think it'll be just what people's level of comfort is. I know for me, I would err on the side of putting the money with a custodian, having them take care of it, and paying a small, moderate fee to have them take care of that. One thing that we're seeing, because we're in the industry, is you're getting insurance companies to back the custodians up and say, look, well, and I don't really know all the details, but they're doing almost like $100 million tranches where an Aon or Lloyd's of London will say, we'll guarantee that 100 million, that 100 million, that 100 million, and so now it's insurable. It's sort of, it's similar to the FDIC. You put your money in a bank, and if the bank gets robbed, then you've got FDIC insurance. But I think for some people, they will want that a la carte, hand holding. Other people will not, but at the end of the day, you can pick what makes sense to you. But I think that's one of the things that's held up more institutional money entering the space. And as these things get defined and understood, and there's education in around it, then I think you're going to see more adoption. Because I think the custody piece is like the one thing that there needs to be more clarity on for the big players to really come in. Mm-hmm. And again, it's slowly making its way to the surface. I know you would know more about this because you're an attorney, you're in DC, but there's a little bit of it's a little unclear on how the rules regarding custody of digital assets work vis-a-vis qualified custodians. And because of that ambiguity, some investors have said, there can't be any ambiguity. There has to be none. My own theory, no evidence of it. You see Fidelity's entered the space already. I think it's plausible that Northern Trust and State Street and Bank of New York will eventually be custodians. I have no information. I'm just guessing. But I think if Fidelity, State Street, Bank of New York, and Northern Trust sit down with the SEC and say, this is critically important, we need a roadmap, I think they're going to get the audience. I would suspect that they would get the audience from the SEC that's necessary and from Congress. And then you'll have absolute clarity in around liens and custody of these digital assets. There will be zero ambiguity. And if that's able to happen in the next 2 to 3 years, obviously that's bullish for the industry.
Mm-hmm. I think the last thing I saw out from the SEC on the custody side was maybe 6 months ago, or maybe a little bit less, but it was a joint statement from them and FINRA, and it was saying something like they needed a certain, I think it was the SPIC insurance, the way that it was worded, you couldn't custody a digital asset. It had to be, cash or some type of investment product. So it just needed a little tweaking on that wording, and then the SPIC could insure it. But I'm not sure if they're willing. But now if players like Lloyd's of London are stepping in, then it might, create enough tension to get them to move forward. But I kind of see adoption through the institutional side. Like right now, Bitcoin has no marketing company for it or anything like that. But if you get institutional players, like I come from a mutual fund, institutional sales background. And, if you have whole teams across the country in positions where they're trying to sell, this one product inside of a fund or something like that, then I think it could really, see a lot more Bitcoin get purchased up. But I think for places like Africa or the developing countries, it might be even more important for them to hold their own custody because they might not have as much trust, or their government might not be trustworthy. So, they could turn around, and the same way they confiscate or, you know, the dollar's moving, they can just say, oh, we're broke, we need your Bitcoin, or, you know, who knows, like what kind of pressure they could put on if the Bitcoin was held at some type of centralized exchange in those countries. But
Right.
but it's so much easier for people to use it when it is just, oh, let me, you know, it's the same as going to a bank account, like if you're using Coinbase or any other solution. That I think that's where you know, it's easy, a much easier process to onboard someone that way than trying to get them to, you know, set up their own wallet and everything.
Right. I mean, just since we're on the topic, I mean, I have to say I've been impressed by the SEC and the CFTC in particular. I mean, I just followed their activities a little bit more closely than maybe FINRA or the National Futures Association. But I see what I think is legitimate interest in trying to work with players in the space. You know, I understand the dilemma that they face as attorneys and, you know, enforcement officials, that they can only deal with the laws the way they're currently written. Okay. Yeah. And I try to remind myself and people in the space that, like, it's not the role of the SEC or the CFTC to write legislation. That's not their job. Their job is to interpret and enforce, right? And so if you think that the laws are moving too slowly, then the more appropriate people to talk to are legislators, congressmen, senators. You know, they write the laws of this country, or maybe state officials. You see the great work by Caitlin Long out in Wyoming and that's amazing, that task force. It's incredible. I mean, Wyoming has seized this opportunity to say, we're going to be a leader in digital assets. And now they've written laws to accommodate that, and presumably business will flow there. But you can't expect the SEC and CFTC, that's not their role to change the law. That's not so they are forced to work with 1933, 1934, whatever acts. It's a little bit old, you know, but they got to figure that out. And of course it creates, you know, some bottlenecks and some, you know, some consternation. But, you know, look, I just think that from the comments I've seen from the public officials, I give them credit for trying to embrace this new technology.
Mm-hmm, absolutely. And from the SEC side too, like they've seen so much fraud from that ICO tear in 2017 that, you know, they're stuck enforcing because, you know, it's not like that. If there wasn't the fraud aspect of it, that wouldn't be where all their attention had to be diverted. But, you know, a lot of the cases that they've brought has been just, you know, disappearing people who stole, you know, millions to billions of dollars. So
that's right. And I think that there's that's exactly right. Their job is to protect investors. And I think that's, you know, why they were so, you know, sort of stringent as they should have been with ICOs. The other big discussion is the ETFs. I mean, you know, from Chicago, so I'm like, look, if you want to trade these things, just get a futures account. But I understand that that's not how the rest of the world looks, and people want these ETFs, and
I think we'll see. Still scares a lot of people. Like, it's not something that is as easy to enter into that market as an individual as some other areas.
Well, I know we're just freestyling here, but I think, you know, it's interesting because the SEC put out a statement about why ETFs were not appropriate, but I think some of their explanations have to be looked at. One of them, for example, is this issue of excessive volatility. I mean, I'll tell you right now that this year, Bitcoin, I'm almost sure has been less volatile than several commodities like natural gas or, you know, platinum or palladium, you know, because as markets have matured and there's options and there's futures and there's all these different clearing mechanisms, volatility has compressed. So we don't have the kind of volatility we had in 2017. I'm not saying we never will, but I think that you know, there's too much volatility in the space argument has to be looked at again, because that volatility has collapsed largely. And so, you know, it's just a process. But I mean, if they had 5 reasons why they didn't like the ETF, I think a couple of them, you know, then there's this argument about the market's been manipulated. But then meanwhile, there's manipulation cases in every other market. There's manipulation cases in equities and commodities and bond markets. And so, well, if those markets are manipulated, then why are people able to trade on those markets but not here? So it's a little, you know, I mean, the biggest problem I think is that the regulators don't have they can't monitor some of these overseas exchanges. So they feel like they're not, you know, they can't go to Binance, which doesn't, you know, what country is Binance even in? I don't know. And they have trouble. They're not the regulator of Binance in Malta. and then they can't regulate those activities, even though I know Binance is trying to come over here. So anyway.
Yeah, it's
complicated.
Regulatory arbitrage is
That's right. That's exactly
kind of a big, big thing.
That's right.
I'd be really interested to see some of the differences of volatility. I hadn't looked at, what some of the other commodities are. I always kind of just assumed that rhetoric that Bitcoin is the most volatile was true, but I haven't looked at the volatility prices of a lot of other commodities, so that'd be an interesting thing to explore more.
It's still very elevated, and it's probably one of the most volatile assets in the world. I mean, other markets may come in and then die down, but I think as you have exchange cleared options on CME and ICE, I just think that the volatility will inherently become more normalized, but still very elevated. But we'll see. I mean, it's who's to say? I mean, we could see extreme volatility. I certainly think there's a case if you get real global adoption. Who knows what the price of this thing could be worth? I couldn't tell you. The thing is, there's 21 million Bitcoin. That's it. All the central banks are just printing money forever. So it's a real change, philosophical change in how money is distributed.
Now, do you think any of the altcoins will have any significance in the future, or are you kind of the maximalist camp? I'm more on that side of things.
I'm an optimist, so try to be a glass half full. I mean, honestly, I really it reminds me of when you had search engines when they started out, and you had like Alta Vista, and I can't even remember them all, and you had all these different, and it was like, oh, which one should I use? And I don't know, click on this, and Lycos was another one, and my sense is there's a Google out there. I have absolutely no idea or what it is. It may not even be in existence yet. But I think that this idea of layers of protocols and scaling, and it's pretty compelling, and all this blockchain technology. There's so much that can happen here. I literally have no idea. I couldn't begin to tell you which one will prevail. But like I look at it from a trader perspective. I wrote about this morning on LinkedIn. I mean, this coin called Tezos is doubled in value in 3 months at a time.
My husband is gonna love that. He was like, "I'll make sure to go pump my Tezos bags," because he had his
it's doubled in value, but at the same time, over the same 90-day period, most like Bitcoin's down almost 30%. So that means it's outperformed 3 to 1. I mean, it's significantly outperformed Bitcoin in the last just 90 days. Now, again, I couldn't tell you that it won't flip the other way. I mean, I have no idea. But like as a trader, I look at what the market is saying. The market right now is saying, hey, this is a coin to watch. I mean, Ethereum's a $17 billion project at the moment. Tezos is a $1 billion. Okay, well, invite me back in 6 months and we can look at it.
I've been having this conversation all week. He thinks it's going to be that we're in 2016 of Ethereum in Tezos right now, but we'll see.
You know what? As a trader for so long, I just keep an open mind. I just don't have. I feel like people have traded professionally or even for themselves, but the more you do it, you genuflect at the altar of the trading gods and say, look, I don't know what's going to happen. Mm-hmm. So, but I can tell you that this is a phenomenon that I'm watching, and we'll see what happens to it. Maybe it falls apart. I mean, I talk to a lot of people in the space, and I hear good things about Tezos. I literally couldn't tell you 3 things about it, but they seem to have a rabid following, as your husband attests to, and good luck to them, But I mean, who knows? Maybe we'll look back in 10 years and it'll be no idea, a much bigger project than it is today. Yeah. Who's to say?
Who's to say? I think there's some legal issues with Tezos as well that have been ongoing, but
maybe, but that's
but it's not impacting the price. So
look, the market's smart. The market prices this stuff in. Or tries to. But look what happened with EOS. I mean, they raised $4 billion. They paid a $24 million fine. Everybody on Twitter's jumping, that's crazy, and why we should do that. But the reality of it is they didn't raise a lot of money in the United States. I don't know what that dollar amount was. It may have only been $6 million, and then they had to pay a 400% fine on what they raised. I have no idea. Maybe they raised $100 million and they fined them 24% of it.
And
I
that's
don't know.
because they don't know who was American or not that bought
Well,
it.
I think they tried to shine a light on what was raised here and where the violations were here. And however they came up with that math, they decided 24 million was the right fine for that project. And then it was just, and everybody, but with Tezos, maybe that's a similar thing. Maybe a lot of money was overseas. I just don't know. But I think that that was a fairly encouraging, the fine could have been a lot bigger. They could have really hammered EOS a lot more, and they didn't. So we'll see what happens with Tezos. I don't know.
Mm-hmm. Yeah. So one other thing I wanted to ask you is kind of from a few minutes ago of conversation, but so Giancarlo, the former
Right.
yeah. I have a photo of him right there. He's a
yeah,
frog
nice.
in that one, but like a green, he was petrified back in 2017 when he had that eloquent speech with Jay Clayton when he was talking about what it really means to hodl, hold on for dear life, which I think, it used to mean something else, but that was his interpretation of it. But he recently came out, or maybe a month or two ago, and said that the adoption of futures was kind of the start of the bear market for Bitcoin, and that it was actually something that was just planned to allow short selling of them, or to allow two-way trading. So have you heard any, or do you have any thoughts on that side of things?
Yeah, I mean, I saw a couple articles about that. I mean, look, you can't, in my estimation, you just can't have a long-only market. I mean, you need to be able to get short. You need to be have buyers and sellers. Before there were futures, there was this convoluted lending market, and it was, very inefficient. And, I did see that article that said that basically some government officials said, look, we got to get these futures out there because this is just crazy. And so they were trying to get the futures out there faster to sort of normalize the market price. Who's to say? I don't know. But I just don't know. But I think that now that you have futures, central clearing of publicly traded exchanges, they're basically utilities. You have now options. Now it's a real market. And that's why I laugh. People are always out there, oh, it's a scam. Everything's a scam, and it's all rigged, and it's all manipulated. I wrote about this. I said, do you think you can manipulate a $135 billion market? Then step right up. Then step right into the ring and go right ahead and manipulate all you want. Because you know what? You don't know what you're talking. I mean, it's just exhausting. I mean, if you think you can manipulate it, then go right ahead. And you'll make a fortune. I mean, the market is what it is. Right now, Bitcoin's trading around $73.50. Okay, great. That's the price. That's the price on 300 exchanges around the world, futures exchanges, and that's the price. And, derivatives markets. And, and so, I mean, maybe you can, I think you have kind of like we had with equities, where it's debatable and, about whether there's micro manipulation, this whole flash boys, and this goes on and on. And, people,
I love Michael.
and whatever. Okay. And I've heard all about that in futures and options while I traded forever. I can't tell you. Maybe there is, maybe there isn't. But the price of the actual underlying asset and instrument, I would just say to someone, well, if you think it's being manipulated, who's manipulating it? And then since you must know, then tell me what the price is going to be tomorrow. Because you should be a billionaire. I mean, if you knew what the price of the thing was going to be tomorrow or next week, then my God, you'd make a fortune. So that's why I just think it's just complete garbage. These allegations of broad manipulation. I just then you should have a lot of money in your checking account, Bear. So I don't know. I'm just, the market, the market's just so much bigger than any one single individual. And I understand there's some very large holders of Bitcoin. So it's a unique market, but again, it's no different than almost like a privately traded, stock or something.
Mm-hmm. Yeah. I've seen a lot of criticism of the market being, so closely held by some of the larger players, but I think some of those numbers get misconstrued too, because a lot of the times it's exchange wallets that they're counting, and those wallets actually hold, hundreds or thousands of people's assets that are just consolidated into one wallet. So I don't know if it's as concentrated as people say, but
right.
And have you been following the China blockchain developments at all?
Yes. I thought the comments by President Xi about a month ago or so were, I mean, clearly seemed to move the market in a significant manner. And I talked to a lot of people in China and Hong Kong, Singapore, they're traders, and they said there's no question about it. That was front page news in every newspaper and nightly news. And China's made a real commitment to blockchain technology. They want to be the world leader in that. And so I think that woke some people up. Again, I think that technology moves very, very quickly, and whether it's a country or a business, people want to be first movers, and China's thrown down the gauntlet. They want to win, and they want to win in this realm. So, I mean, it's when you see those types of comments, it makes me think that, I mean, clearly there's been an absolutely massive shift in the last 12 to 24 months from governments about digital currencies. I mean, Germany wants to let banks do custody of assets. EU's talking about a digital asset. China's talking about a digital asset. I mean, it's all around the world. And so this is like happening very, very fast. You've got the Libra project with Facebook. Again, I don't know how it shakes out, but I think this transition towards digital money is not likely to go back into the bottle. The genie's not going back in the bottle. So it's going to keep accelerating. I don't know how it's going to shake out. Nobody really does. But you're seeing, a lot of major transitions. I mean, the one thing I always think about, because people compare this to the internet, and there's this concept called Moore's Law. Moore's Law was from Hewlett Packard, and about chips would double in speed every 18 months in perpetuity. And people thought they were crazy in the 70s when they came out with that idea. And Moore's Law hasn't slowed down. I just think that the process of change with Bitcoin and blockchain technology is likely to go at a rate that's much, much faster than the integration of internet technology was. And people just think, okay, well, it took 25 years for me to become a shopper on Amazon, so I'll pencil in the year 2045 for when I should pay attention to Bitcoin and blockchain. I just don't think things are going to move that slowly. I think things can move at a blinding speed relative to what they did a generation ago. So that's why I just think that change is likely to happen just at a faster rate than we're used to seeing.
Mm-hmm. Yeah, absolutely. I went to this SEC had a conference, the State of the Markets conference, last week. I think it was Tuesday or Wednesday. Anyway, I went, and it was my first time going to something like this, and I was there by myself, and I was feeling a little bit sheepish of a few people like around the coffee thing where they're all these like pretty well, it sounded like well-established economists, and they, anytime someone asked me what type of area of law I was in, and I was, trying to explain, oh, I'm in the, the cryptocurrency space or Bitcoin, for some reason I was feeling a little bit like, out of place. Like me, I was wishing I could say, oh, I'm a securities attorney for some big company or something like that. But then interestingly, as the conversation, I only stayed for the first, hour and a half, and it was a fireside chat with, Jay Clayton and Mr. Cohen and one other guy, and I can't remember his name, and he was the best. I really enjoyed listening to him speak, so now I feel ridiculous that I can't remember his name on the spot here, but their conversation completely turned over to digital currency, like at every step of the way. Like it was like they couldn't get off the topic, even though it didn't seem like Jay Clayton wanted to particularly be talking about that. It was just, It seemed that the technology was, all encompassing, and they were saying it's actually going to be a really good way to capture money laundering, and more. Basically, they were actually talking about moving to a stable coin for the U.S. dollar at one point. Not saying that they were going to do it; they were hypothetically talking about it. It just was such a different feeling around it than it was 2 years ago when we had Mr. Clayton saying all tokens are securities and whatnot, and now the words out of his mouth, like just talking as if well, if we went to a digital reserve currency, it would be like this and this. And there, the guy whose name I can't remember, which I'm gonna look it up after this and put it in the comments, but he was saying that we've gone, it's basically we were at the TCP/IP stage of the internet where we're just sending messages to everyone, and then a big transformation happened with the VoIP where we could send video files, and then the next big transformation will be sending value, like financial value over the internet, which we can already do it anyway. But he was talking about the rollout of digital currency being a major thing for the next little while. So,
right.
not that that's any big news, but I thought it was interesting that they were the ones, talking about it.
Right. I mean, I think that, like you said, the conversation has changed so much in just the 2 years that I've been sort of following this. And, I think before it kind of was just this backwater, people talking about transactions from the Silk Road. It's just like, that's just the wild, wild west part of it is dying down, because now it's transitioned to like the real economy in this country. We're going to have regulators. They're going to look at these transactions, whether it's the IRS or the SEC, CFTC, FinCEN, and that's the world we live in. So so now, if you want to participate in digital assets in this country, you just have to do it in a regulated fashion. There's really no other way around it. I think it's an opportunity, like you said, for the regulators. It almost makes their life easier because it's on the blockchain, right? So you can. So anyway, but look, it's like you said, it's amazing how quickly this stuff changes. Mm-hmm. So look, there's an election in this country next year. Who knows? I mean, a change of government. I'm not advocating one, but I'm just saying, what would it look like in a Democratic White House? I don't know. I don't know. Congress could change again. As you may have seen this week, the CEO of BACT, which is ICE, is now she's going to be the interim senator from Georgia. I think the people, it's Kelly Loeffler. I think people in the space that I know are enthusiastic about her taking that role, because she'll certainly be a champion of the industry. You'd expect. And we need more people in Washington who are respected, that understand digital assets and can advocate for a regulated environment with this form of money.
Mm-hmm. And the guy's name, it was Glenn Hutchins. I don't know if
well, Glenn Hutchins is right. He's the big venture capitalist at Silver Lake. Yeah, he's a genius. Yeah. So I know who he is. Yeah. Well, it's interesting that he was sort of commenting on this. Yeah, he knows what he's talking about.
Yeah, it was everything he said. I was hanging on to each word, and then I felt really silly that I couldn't think of his name right away. But yeah, when he was talking about, and he was saying, so Mr. Cohen was saying, the blockchain for the digital reserve, but Mr. Hutchins was just talking about Bitcoin, and in a very positive way. So it was.
There you go. I mean, he's out in either LA or Silicon Valley or somewhere out there, but yeah, obviously very looped in. It's one thing, and just off topic, but it's interesting. You see, you have sort of the New York, Boston, Washington, Chicago, Philadelphia corridor, so to speak, very rules-based, regulatory focused. And, California seems to have a very different approach towards regulators. You see Elon Musk and his tweets, and some of the exchanges in the crypto space that are from California have a very different attitude towards regulators. I wish them luck with that. they're sort of like, sort of confrontational approach. I don't understand it, because but anyway, it's just interesting, because I think that, California has a very just a different approach to regulators. I really don't know how else to explain it. Whereas I think you look at, like, in New York with, firms like Gemini and Galaxy Digital, they're from Wall Street, and they understand, like, this is the way business is conducted. So I just find it interesting, that's all. Mm-hmm. We'll see where things end up in the next few years.
Agreed. Yeah. Although I love the non-regulated side of things to a degree, I think the future in America will probably follow more down this regulated path.
Well, you may follow this more than I do, but I saw a story about 6 months ago that the SEC put a new enforcement director in San Francisco, and whoever it was like, there's a new sheriff in town. We're gonna explain how business gets done in this country, and we're gonna follow these rules. And so it was just interesting. I haven't checked in on that, but it was like, there are a lot of things being done that are not by the book, and we need to get full enforcement in all 50 states. So I just thought to myself, all right, well, there's gonna be some turmoil out there, and But
Yeah.
whatever. I mean, look, you have to have a rules-based compliant infrastructure. Otherwise, it's chaos. And that's really what it boils down to. You need a rules-based system. And we need more clarity on those rules, but you got to have them. And then people have to buy into that. And then you can run your business.
Mm-hmm.
And you get plenty of clients, right? See?
Yeah, true enough. Mm-hmm. Yeah, the uncertainty is what causes it. It just causes people to almost have to stop their business and figure it out. Or right now, I've been working with a lot of people on the money service business side of things, and they're getting these IRS Title 31 audits, which are pretty, it's not very comfortable for them when they're preparing for it right now. But yeah, I've talked to the IRS a little bit about it. I don't think I don't want to comment because I have no idea what they're going to do. The first one that I'm involved with helping the person isn't until December 18th, but I think it's more of a learning experience for the IRS too. They said they just graduated a class full of agents that can go perform these audits. So I think it's more of an exploratory, let's see who's complying, what they're doing, rather than, enforcing against people that are trying to follow the spirit of it, but maybe missed one or two transactions collecting the KYC kind of thing. I think, you have to have the intent to really come under the gun from them. You have to be intending to
right
or something like that.
Sure.
But it's still, no one likes getting audited, I don't think.
No.
Yeah. But okay, so where can I've really enjoyed this conversation, by the way. An hour kind of flew by here.
Wow.
But where can people find you?
Well, I write a lot on LinkedIn. So I started almost 2 years ago, and I write like every single day, and I just enjoy writing. Really, that's really what it boils down to. So, please feel free to reach out to me on LinkedIn. Anybody. It's funny with LinkedIn because you get capped at the number of people. So I kind of have to like drop people to add people, but I'm happy to do it. I mean, I'd love for your podcast listeners to reach out to me. And I like I said, I expect to continue to write for a long time. I enjoy it, and it's fun, and I just write whatever's on my mind. And the nice thing about it is, I don't have an editor per se, although people are like, oh, you write whatever you want. I'm like, well, listen, there's rules of decorum on LinkedIn, and there's also disparagement laws. So, there's still, you have to stay within a certain box, or LinkedIn will kick you out, or somebody will sue you. So, I've written, 3,000 or 4,000 posts. They've probably been viewed by 4 or 5 million times. So it's a lot, and nobody sued me, and LinkedIn hasn't kicked me off the platform yet. So, whatever. I'm staying within the lane that LinkedIn would like me to be in. So, but please follow along.
Yeah, the posts I've seen, they've been very interesting. So I certainly encourage everyone to follow you and enjoy reading your work. Mm-hmm.
Thank you so much. Well, this has been a blast. Good luck with your podcast and your legal practice, and let's do this again sometime.
Yeah, definitely. Sounds good. Are you going to do you go to crypto conferences or anything? I know you saw Anessa at a conference, but that was,
I have, and they've changed a lot. They've kind of matured, but, and they're great. But, what I want to do next year, I need to get a road trip to Asia. I really need to get out and go to see clients in Singapore and Hong Kong and Tokyo and Seoul and Beijing, Shanghai. The real story of Bitcoin is Asia, as far as I can tell. And so I need to engage more over in there, whether they're at conferences or just trying to meet people. So that's kind of one of my focus for next year, is to spend more time in Asia, or some time in Asia. So we'll see. I'm sure I'll be at some conferences though.
Excellent. Okay. Well, thank you so much. And I'll post your LinkedIn, the link to your page in the comments of this, so people can find you. But thank you. It was really interesting to speaking with you.
Thank you so much, Sasha. Really appreciate it.